Welcome to another Rooster Talk. We're here today at the UWA Club here in Crawley, where we're talking to Robert Martin here from Suvo Strategic Minerals Limited. Code is SUV. Robert has been on Coffee Samso before, telling us the story of Suvo. They've just released their mineral estimate coming out, which is on the Silica Project, which is something we sort of touched on before. But Robert, welcome to Rooster Talk.
Thanks for having me back.
And look, fantastic announcement. Share with us.
Well, we're glad to get it out. I think our long-holding shareholders or long-suffering shareholders have been waiting for this for a long time. Not that they're suffering, but we did promise this result back in late December. We were ready to release it. We brought a new geologist on board and he got us to back the train up a little bit, and he said, whoa, you've got some really good things here. We need to do this a little bit more thoroughly, a little bit better. So we've put a program around it around the last 6 months, and yesterday's announcement was the end result of that, or not the end result, really the start of that, because we come out with a 216 million tonne resource. The good part of that is we've only drilled 15% of the tenements, so there's a lot of upside to come, and we were quite happy with some of the work that we've done previously. We've done a lot of met test work before we come out with these results about what we had in the ground, and we've found it to be, it's not just your basic standard silica glass foundry sand. We've got a component in there that's silica flour, which is quite a high valued product. So the suite of products we have make for a pretty good announcement, and should give shareholders the reward and for the patience for this to come out, because it is just the start. It is something we probably haven't had the value for on our share price in the last 12 months, and I think now over the next 2, 3, 4, 5, 6 months, when we improve that, when we grow it, shareholders should see some really, really good value coming out of it, because it is a world-class resource. I think we've proven that with just that small announcement, and I think over time we'll make that larger, better, and shareholders will get the reward they need.
I mean, silica is kind of boring commodity that's actually very important in day to day, right? A lot of people don't realize that if we don't have silica, we don't have a lot of things. What's the significance? What would this give Suvo? I know you've touched on it, but what would it give? Because it is bigger than a small announcement, right? Yeah,
well, silica globally is becoming, not all silica is equal, right? You sand at the
oils
beach,
and oils.
Yeah, the sand in the desert, it's not any good for what we need. So it needs to be a certain grade, shape, type. So you'll probably see a lot of the Asian and Southeast Asian countries have put it on their critical mineral list. They're not exporting it now. It's in everything you see, when we're building glass, it's in everything. So there is a shortage of it. It is going to be a commodity that I think over the next 12, 18, 24 months, 2 years, 5 years is going to grow significantly. Australia, we're blessed with a lot of natural resources, silica being one of them. But in saying that too, with a decent silica deposit, you really need infrastructure. You need to be able to get it out of the country. It's all good and well to have it in the ground. You need to be able to move it. Being that it's a bulk mineral, and it's a bulk commodity, you need to be able to move it, and you need to be able to move it efficiently. The Nova deposit we have is afforded quite a luxurious suite of logistics and other. We've got a gas power plant that sits on our tenements. We've got a rail line that's to the east of our tenements that goes directly to the Geraldton port. We've got power lines, there's water licenses on there. So we're afforded a lot of those luxuries that make this significant. So, the Southeast Asian countries, India, those sort of areas, they want good quality silica sand for glass, they want for solar panels, they want construction sand, which is probably something that wasn't on the radar of a lot of companies years ago because the pricing wasn't there. But even construction sand now is becoming more and more rare. It's harder to get good quality stuff. A lot of the buildings that are they're manufactured in the UAE and those areas using Australian construction sand. So it is something that's growing. I think a lot more people will stand up and take notice of it over the years to come, because it is becoming harder and harder to get good quality, and good quality at the right price. So
I know silica because even going back almost 10 years ago, I was asked to look for silica, and we looked far and wide in Asia. And one of the big issues with this was a lot of those nice sands actually on nice beaches, and they're not the best, right? So that's why a lot of the silica sand here is good and interesting, because you don't fall into that category. It's a beneficiating process, right?
well, you know, a lot of the silica deposits globally, even in Australia, have been sterilised because they've been built over the top of. You know, because, you know, 5, 10, 15 years ago there was plenty of it and nobody cared, and that's changing. So, you know, we see, even though we haven't been pushing our silica products or assets at the moment, because we were focusing on our Kaolin assets, we were getting calls weekly, you know, even daily, about what are you guys doing with that? What have you got? Do you need capital? Do you need this? Do you need that? And we've been holding back until we come out with these results. So, look, good quality, low impurity silica will be very valuable in years to come. It's very valuable now. It's not something that's, you know, complex mining. You know, you're quarrying, you're digging. It's not complex processing. Capital requirements for a decent sized plant are not onerous. You know, $25 to $50 million gets you a decent plant. You know, the profits are there. It's being afforded a decent infrastructure network, power, gas, rail, those kinds of things that'll bring some of these on before a lot of the others. So, you know, like I said at the start, we've come out with a 216 million tonne resource. You know, we drilled to 20 metres. We have historical data where the drilling is to 50 metres, ending in mineralisation. So if you look at it as simplistically as that, if we were to drill to 50 metres and some, we would double and some the current resource we have, just simply doing that. That's without extending to the north and the south. And we are on a, you know, 156 square kilometre tenement up there, so it's, you can imagine how big this thing can be. But once again, we're afforded rail, power, gas, which is really critical. And the size of it, hopefully, you know, will help with trading partners overseas to see that, hey, these guys can probably get this done a lot quicker than everybody else because they're afforded that. So we'll see. I
mean, I bring this up because a lot of people talk when they say, "Oh, we've only got touch only the tip of the iceberg." You know, I've only got 10% or 15%, but in most cases, when you look at the reality of it, that's all they've had, or that's all they've got. How would you counter that thought?
Well, simply that. We've drilled 15% of the tenement. We stopped drilling at 20 metres. If we were to go to 50, do the math. And we've got historical data that they finished drilling at 50 metres, ended the mineralisation, so it's going to be vast. We've also done some exploratory work on further north and south. It's still there, so we will without doubt increase this. We'll do a lot more met work. We'll hopefully increase the grades. Even though the grades, the low impurities, titanium and iron are very, very good, we hope to even do better with that. The other thing that's afforded our deposit in Eneabba is the fact that we have something that nobody else has really spoken about, which is a silica flower. Now, we have that naturally occurring. Now, silica flower is produced artificially by crushing silica. Problem with that is it's carcinogenic, so it creates all kinds of problems. You need heat, you need energy, there's a lot of logistics involved. We have it naturally occurring, and some of those prices range from, you know, 70, 80 US dollars, way above 200 US dollars a tonne. Now that's naturally occurring in ground, and, you know, at the last results we had 60 million tonnes of that, you know, on our current drilling at 15% of the tenement. So the value of that in-ground resource, the value of our silica for glass making, the silica for the foundry, and adding that silica flower on top is, you know, well, it starts with a B. It's way up there. So it's really, really promising. And like I said before, Suvo probably doesn't get any value for those assets because we've never pushed them. We ended up buying a Kaolin operating mine. You know, we've been focusing on that. We've been focusing on Gabon to bring that into production, or to build a plant there as well. So we'll now start putting a little bit more effort into this and marketing this, and we'll go and speak to some of the people that have been speaking to us about wanting offtakes, wanting to partner up a little bit more seriously. We'll get drill rigs back out there ASAP and just prove this up a little bit more and do a little bit more met test work, and we should see the value come from it. I mean, our peers for silica have way larger market caps than what we do, and we feel that they're probably lacking behind with what we have, because we have the infrastructure, we have the in-ground resource, and we have the low impurities. So,
sorry to cut you off.
Oh no, we're just really looking forward to getting that out.
Look, silica is a very interesting business. When I look at the silica market, it's actually one of those markets that's sort of been lagging, left behind, misunderstood, and whereas now you're starting to hear a bit of drive, of what it is, but it is in everybody's home, and if people just have a look on your roof, without quality silica, and those panels will get more efficient over time, and that's from quality silica. Would that be true?
That'd be true. I mean, because it's an opaque market, and you can't go to the LME and look and go, oh, it's trading at 55 US a tonne or anything like that. It makes it hard for a lot of people to believe, is that pricing real? Can they actually achieve that? I mean, if you look at the compound growth rate annually on silica, it's on this trajectory. There are studies out where people are saying that there is a 30 million tonne supply deficit between the Southeast Asian and Asian countries of what they can get and what they need, because they've had the same problem that Australia's had. They've sterilised a lot by building over the top of it, or they've depleted it. So, if it was exchange traded, I think we'd be having a different conversation. I know there are a number of groups that are looking to implement something along those lines because of the requirements and the need. I mean, there's talk of India needing 800 million to 1 billion tonnes per annum, and they can't get it. There's a program on YouTube called Sand Wars. I'd encourage people to watch that to see what's actually going on in that market. But once again, because it's so opaque, it's hard to get people excited in silica. I was in mining 20 years. Silica certainly wasn't on our radar, but I think, like I said earlier, you'll find over the next 12, 18 months, 2 years, 5 years, that this is going to be a market that's going to grow, and it'll get a lot of value, and there'll be some good companies in Australia that get some good wins out of it, including us.
Oh, I mean, the one thing that I learned from your announcement is that it's actually silica flour, not flour, which I thought it was, and I was trying to picture it. But when you've got those kind of categories, and I think it's good that you've highlighted that, because there's 3 categories, so it's almost a case of different grades of silica, right?
Different grades, different revenue streams, different markets. We're not stuck with just one market. It is a really unique resource for that reason, and it's one of the reasons why the geologists had us back the train up a little bit before and get this right, so we can come out with the market, look serious, have a number of different revenue streams, have a number of different options with when we mine, the way we process. The processing is not a hard technique, it's pretty simple. So, being able to produce different grades and different types, attract different markets at different pricing, project economics with silica flour, and that'll be, sensational. So, it is unique, and it is something we're looking forward to doing.
And I think, if I'm not mistaken, the processing part of your business is more physical rather than chemical. Is that correct?
Washing, screening. I don't think there's any chemical process required. Maybe some mag separation, it'll depend. Fractional sizes come out. All these are different fractional sizes, so we can do that during the process. Some of it, you need to build a decent flow, decent technology, but it's not complex. It's not like the Kaolin that's complex. In our last interview, I explained that Pitong, our operational kaolin mine, we have 21 different products that are all made differently. This is wash it, screen it, maybe wash it again depending on what we need to do, and off to market. It is an industrial mineral. It is a bulk mineral. You don't want to be trucking it. You don't want to be moving it, picking it up, putting it down. You want to be able to do it and get it out of the country, get it to port and get it out of here. The less you can touch it, the more money you'll make. And there are other companies that have put out bankable feasibility studies, and their numbers are very, very impressive. Compared to the sale price, compared to your all-in sustaining cost, it's very profitable, very profitable. So,
I mean, the business is a bit like iron ore, this bulk commodity stuff. It's really boring, but people make a lot of money selling salt, right? So and you can't get any boring than salt, right? So I think that's why I like what you guys are doing and the potential of what this could be, right? It's either going to go really, really well, or it's going to take a while for you guys to get your motion in cycle. But so going forward, what's the news flow?
Well, we've got a scoping study that's already started. We engaged Primero to undertake a scoping study on the assets. We've got further drilling that's planned. We've got further met test work. Obviously, we're talking with offtake partners, and I say partners because we want to partner with the right people, so we've got that longevity. We have a multi-generational mine there if we can get it underway. So we want to make sure that going forward we have that. Testing out markets, growing different markets, the met test work. We've got some very smart people working for us as far as that goes. So, looking forward to that. What else have we got going on up there? Well, that's really it in the short term, but that's, doesn't sound like a lot, but it is a lot because it adds a lot of value. I mean, the next lot of drilling to bring that up is, to half a billion, 1 billion tonnes at good grade is quite achievable.
I mean, for you guys out there who's sort of never sort of looked at this industry, I think it's one of those industries that are easily misunderstood and not looked at because it's not flair. There's no dancing girls on the table. It's just straight boring silica, right? It's
boring but very profitable.
Yeah,
and it's low capex. So we're not looking at building a $400 million plant here. You're talking $25 to $50 million to do something decent. But the return on that will be astronomical if you do it right. And we intend to do it right. Like with our Kaolin, we're going to do it right. We're going to do it big, and we're going to try and capture a lot of that market while we can. Yeah.
Look, I think that there's a shift in how we look at products, and there's things like the industrial minerals. We could be embarking on another industrial revolution in a sense, because look, India has been a sleeping giant for a while, overshadowed by the high-flying China economy.
Yep.
And when that comes up, as you said, there's a big demand coming from that part of the world.
Yeah, not only for the silica, but for also our Kaolin, because they are, urbanising. When they urbanise, they need cisterns, toilet bowls, everything that Kaolin goes into. They need windows, they need everything that silica goes into. There's just so many different products, tableware, glasses, it's just endless. And, we're not making any more of this, and it's all different. There's all different grades. You can't use desert sand or anything like that. They go, well, the sand's everywhere. It's not all the same. A bit like Kaolin. Not all Kaolin's the same. So, we believe we're sitting on something that's multi-generational, very large, low impurities, and very valuable, especially with a suite of 3 or 4 different products we can take to the market.
Okay. Look, Robert, fantastic. Any last words of wisdom from Sir Silica now?
No, I just want to thank the shareholders for the patience, because we did say we were coming out with this a little bit earlier, but I think the patience for those guys will be rewarded, because this is real, it is large, and we've done a lot of work in the background for not only this, but for what we're going to announce going forward. And there is some other good news that I can't talk about, but there's some other good news coming that our shareholders will be very, very happy with. So we look forward to getting that out. And of course, we'll continue on with our Kaolin operations in Victoria that are going extremely well. We've increased production by 35% without increasing our operational expenses, which is fantastic. We'll see that in the bottom line numbers. We're inundated with sales inquiries. We're progressing Gabon with our Western Australian Kaolin asset with environmentals and social studies and whatnot. So we'll have a lot of news coming out on both of those projects going forward. So, Suvo, whereas the silica thematic's probably been a little bit lost because we were pushing Kaolin, we're not a one-trick pony. We have good quality assets, 2 different asset classes, but I think those asset classes can work hand in hand because of the nature of them as industrial minerals, and I think the shareholders will see that value in time to come when people start to realise how valuable it is. And that's what we're looking forward to, and I think with where we are now with our market cap and share price, I think it's very good value for shareholders to jump on, because there's a lot to come.
It makes sense. I mean, with silica and kaolin, it's industrial and it's in that neat kind of thing, you know, and it's sort of bulky as well.
Yeah.
So, look, Robert, thank you for sharing, and look, I hope you'll give us another more news in time to come.
A couple more weeks, we'll have another sit down.
Yeah. All right. Thank you.